Well, it has been a really, really good day, Brian Wang. I mean, there's good days and then there's really good days.
Mhm.
And I think we've got a lot to talk about. I think most of the people watching right now would, we're not going to bury the lead. We're going to go right for the jugular right out the gate here. We are now sitting in the after hours at, I think, 3:26. And I'm sorry, three. Almost 4:26, just under 4:20. Oh, no, no, wait. No, 4:27. 4:27. That's where we're sitting right now. What does that mean? Where are we going? Should we put on our seatbelts now, or do we have to? We've tested 410 a couple of times, and
So the way some of the technical other analysts work is if on the open we have a full hourly candle, so they trade the hourly, they trade the daily, full hourly candle over 427. That means green light for the swing traders to say we're going to go to 440.
427 means 440.
427 means 440. That's
So
right.
that's opening tomorrow, 427.
Yeah.
That's the number.
Yeah,
Okay.
but then, they would say statistically, hey, 60% chance, blah, blah,
Right.
blah. And then they would have a stop loss at 425 or something like that, if you're playing that. But it would mean the odds are that, we're going to 440 and then we buck through 440 and then we're at all-time highs.
Okay. All right. So yeah. So it's very much aligned with my stupid. I mean, that's my technical analysis, which comes from something. I don't know what. I do know that I called the other day when nobody else on my channel, at least, was calling that we would have to test 410 a couple of times. And since then, we've tested 410 twice. So I think I deserve a brownie point for that one.
Okay, yes, you do. Yes, you do.
All right. So anyway, okay, so that's the deal. So there you go, folks. There's the setup. 427 tomorrow morning. We're going to 440. After that, we can go to, if we break through 440, we go to all-time highs. I'm, by the way, 100% aligned with you. I think that's right. Do I think we could go back down? Yes. You think so too. All right. We could go to 390. There's another one I forget, like a 367 or something.
Yeah.
We could go back and test. All right. Okay, so the next thing on the hot list today is the Fed decision. So I already did an entire show on that earlier today. And by the way, people really liked it, apparently. I'm getting massive views. Anyway, so the Fed decision came in 25 points as expected, lower, and also with probable two more cuts this year and at least one cut next year. The betting markets have already gone and they've already agreed to, I think it's 90% or more is for two cuts this year. So what did you think about that?
I had a public prediction that it would be a 25-point cut today. Um, you know, some people think 50 points, some people think no cut. I said it was going to be 25-point cut. And then the next two cuts, again, was the expectation, just because um, that's how the Fed rolls. They want to do, in general, three 25-point cuts. Once they get going, that's typically, the outlier was when they cut 50 points
Right.
before the election and stopped
I mean,
for,
yeah,
for some reason, perhaps political. Yeah, yeah,
I don't know.
yeah,
Who would know? Who would begin to think that?
yeah.
Yeah. So I thought, among all the things, like I said, I've already done a complete report on this, but one of the things I didn't talk much about was Powell said that one of the reasons he made the decision, or that they made the decision, that this was the time to cut was, of course, because the jobs was getting a little bit softer. And he said that it was when he literally said this. He says, when we got the reduction of 900,000 jobs
Hmm. Yeah,
from what was reported earlier. When we got he didn't say when we got the real numbers after
yeah,
he lied to for a year,
yeah,
but he might as well have.
yeah.
And they even asked him. So one of the reporters even asked him, "Well, what about these numbers? How can you even make policy?" And he really dodged it. He says, "Well, we have to look through the front windshield. We can't look through the rear windshield." And I'm thinking, my gosh, that's such a dumb response.
Yeah, especially with the broken windshield. Yeah.
Broken windshield. That's right.
Broken rear view mirror, whatever, front view mirror, whatever it is. Yeah.
So anyway, that's how he made his decision. He was like, "Oh well, if I only known that it was this bad, I would have cut earlier. By the way, he was asked that and he said, that was when he said, no rear mirror. What did you think about his comments with regard to bad numbers?
He is consistent. So he basically, was missing the jobs weakness for the past 6 to 8 months, saying that, the jobs still look good, the jobs still look good. Just like he missed the inflation is transitory for about a year. So his delay in 9 to 12 months is highly consistent. So he gets points of some kind for consistency.
Okay, so how come he doesn't get points taken off for his inconsistent approach to tariffs? Now I'm going to take you through his tariff statements. Okay.
Yeah.
When the tariffs first came out, and the very next meeting, when everybody thought he would cut, and he said, I can't cut now. I can't cut now because we got these tariffs and we don't know what they're going to do. Now we think they're only going to result in about 0.6% increase for the year. I can remember it like it was yesterday, from 2.5 to 3.1. This was his statement.
Yeah.
Okay? And he says, we don't know if it'll do that, and we don't know if it'll cause a continuing inflation, but it probably won't because it's price. It's not inflation. And so, but we can't raise we can't lower the interest rates now because we don't know what it's going to do.
Yeah.
So then it did nothing. Then the next meeting, I think it was in May, he says, well, in June, he says, well, we got to wait till the end of summer. We won't really know what the tariffs are going to do till the end of summer. Then today he goes, well, the tariffs haven't really done anything. In fact, so far they've impacted prices maybe between 0.3 and 0.4.
Yeah.
Which is at the lower end of my number, which was between 0.4 and 0.8. So it seems to me that he's been consistent about how much impact he thought it would have, but the inconsistency was not lowering the rates when he thought it wasn't going to have any impact.
Yeah. Yeah. So what can I say? I think he's terrible. And this is highly political, and the tariff inflation is a nothing burger, and that we should be cutting, more.
Okay. We only get one set of data this time between now and the next Fed meeting. Next meeting's October 28th and 29th, I believe. And we only get one CPI and one PPI and one PCE and one jobs report, because the PCE, I think, comes out the day after the Fed meeting. I think I may have that. I may be off on that, but okay. So we have a big deal this morning.
Before we get off that,
Okay.
Tesla tends to run in recent times when we get into a series of interest rate cuts.
Yeah.
Right. So this is really good for Tesla, independent of anything else. That 2 interest rate cuts through the, total 3 interest rate cuts through the quarter or whatever it is, through the end of the year, down 75 basis points. That's good for Tesla. Less they have to give loan support, other things. Everyone's feeling better about the economy. All that's good. By May, Jerome is out.
Yeah.
Right. And then we'll have a new person in that is probably highly aligned with Donald Trump's policy around interest rate cut. So if this Fed does not cut further in the first 5 months of next year, they do 3 cuts and then they pause and wait, which is highly possible, right? Then if they get another cut or not, probably by May through the summer, new person would say, barring really bad inflation data, actual, like, okay, I'm seeing something and the cuts are causing problems, right? If they're not causing problems, you would probably have another 4 cuts. You would 4 to 5 cuts. You would take another net total, this 25 with 175 basis points for another 2% down.
Yeah, and I'm kind of on the other side of that. I'm not saying that that's not true. I'm saying my feeling would be, I think that we'd be okay to stop the cuts at around 3 to 3.25, barring a problem in the economy. I don't see any problems in the economy. I think this 75 basis points will really help the manufacturing, really help housing. I think it'll help small banks. It'll help all the parts of the economy that have been suffering. And I think, and then if it turns out in May or June, whenever the new guy comes in, if it turns out that that part of the economy is still not quite there, then, going down another couple of shots would be good. I don't think we want to get back down into that 1.5 or 1% range again. I don't think that's a good thing long term.
I was thinking the base would be, what is it, restrictive, non-restrictive, if you're 100 points over the
Right.
interest rate number,
Right.
right? So if you're running off of data,
Right.
right, and you say, okay, here's the interest rate number,
Right.
and I want to be 100 points over, like some new guy could announce,
Right.
here's the rule that I'm going with.
Right.
Then that would actually be data dependent,
Right.
right? Or you could say, and what Chamath of All In Podcasts keeps
Right.
saying, that we should have the interest rates go to the bond market, and then you could do it by saying, we're the new sheriffs in town. We're gonna basically have it tied to 10-year to the whatever, and then have it move up and down based on that, right? Or to some other formula,
Right.
right? They could do formula-based thing. That way, it would react live, kind of like to the markets, which is, they have better data. Like the data going to the bond traders, et cetera, T-bill traders would be market-based information.
Right. So, and by the way, mortgage rates, which were 5.16 this morning, I'm sorry, keep doing that, 6.16 this morning, did pop up a little bit to 6.22, but that's still a good number. And it's pretty easy to buy a 6.22 down to a 5.99 if you want to. You as a consumer can buy that down. But I think it'll come down anyway. I think we'll see bonds coming down into the 3s, and I think we'll see mortgages coming down into the 5s in the next couple of weeks. It might take a couple of weeks.
Okay.
I think it was profit taking is what happened on the bond market today. Sell on the news, that type of stuff. Okay, Uber Freight. Uber Freight says what?
Yeah.
He said, "Oh, we'd like to join up with you guys."
Yeah,
So
Tesla Semi,
yeah,
yes.
you're the Tesla Semi man. Talk to me.
Yeah. So Uber, besides giving rides in passenger cars to people, also has a service where they do semi trucks, and by getting a deal with Tesla, then some number of Tesla semis will be more quickly absorbed into the market, and whatever the current numbers of semis Uber has now under that program could rapidly expand with Tesla Semi coming to, especially if there was any kind of platooning, which I think is near, which is basically you have a convoy of 3 trucks, 1 driver up front, 2 without drivers following using technology. Because that would be basically supervised from the front, right? It would be a far easier problem, and other guys are working towards that, and that would give you a significant savings. So, currently it's about $2.20 per mile average charge, variation based on type of truck and stuff like that. But ballpark 220, ballpark 150, including the driver at 70 cents, right? $1.50 for the per mile cost.
Just because you go to electric?
No, that's still diesel. That's
I'm
still
sorry?
that's still diesel.
Still diesel. Okay.
Still diesel, $1.50, $1.50, $1.60. It goes up and down based on the price of gas.
Okay.
Right? Price of diesel. So $1.50 to $1.60. But the Tesla Semi will be at like $1.30, $1.25.
Okay.
Cost electricity, all that kind of
Right.
stuff, because of the efficiency of it. That electricity is cheaper per mile with the efficiency of a Tesla. Other electric trucks that are like $1.40 to higher, they're a bit better, can be a bit better, but the cost is different. More cost on buying it, less cost on operating it, right? But then if you get the automation, that's where you drop down to 56 cents per mile, right?
Wow.
So once the economics start working out, like there's an economic gain right off the bat, even
Right.
if you're driving
Right.
the truck yourself,
Uh-huh.
right? And then if the big steps would be getting the driver out in some way, or two-thirds of the cost out if I have one driver for every three trucks.
Yeah, so as I talked a little bit about this, I didn't have any idea that Nicholas Gibbs knew so much about the trucking business. But if you haven't seen last night's show, you should really take a look at least that part of it. So he knows a lot about it. So do I. I've had a lot of experience with the trucking industry, and what Uber's doing is solving the truck driver's problem, the independent truck driver's problem. The independent truck driver usually isn't a business person. They're usually not even that smart. They're just somebody who loves to take a truck on the road. And so they got several problems. They got to buy a $150,000 vehicle. They got to make sure they make the payments. They got repairs. They got downtime. They got a huge fuel bill. And if their credit card gets taken away because they run out of money on the road, their history. They've got all these things because I know all about this because I was working with a factor who would get the phone call from the guy on the road and go, "Hey, you need to put more money in my account because I can't pay my fuel bill." And the factor's like, "Yeah, but you haven't delivered the load yet. How can I give you money against the load?" So I mean, this is the kind of problems these guys have. Okay, well, Uber smooths all that out because Uber says we're going to give you some kind of a deal on the truck. And we're going to make sure that we keep you loaded up. We keep you in loads. Okay.
Yeah.
So this is the basics of the business.
Yeah.
And if Uber can keep these people in loads, and then they probably don't even have to factor. They can just, manage their money better.
Right.
And so this is a really cool thing that Uber is doing. Quite frankly, I've got to give them a big hand, knowing what I know about the independent trucking business. It's a really cool thing for these people.
Yeah, there's all kinds of stuff where they have like for robotaxi for taxi, you have the company that's taking the bookings, and then they're being allocated these things for a small truck individual or a small company with six trucks or something like that. They may have some secretarial or booking person who's
Right.
arranging the loads, right? And they're using software that tells them, okay, here's the available loads, the potential could bid for, and then they got to like close the deals and all that kind of stuff. And there's nuances to that because I could get a very high paying load going from this state to that state, but then that other state may not have loads coming back out,
Right.
and I don't want to come out empty,
Yeah.
right? So there's a bunch of those kind of nuances, and Uber with better software could help maximize the whole situation, just like they can do surge pricing and other stuff like that. All the negotiations and stuff can be automated,
Right.
just like they automate it for the Uber drivers.
100%.
Yeah.
Yeah. So this looks like a really good deal for Tesla. But my question is, if this is an okay deal for Uber and Tesla on trucks, why isn't the same deal on the cabs? Seemed to me it's no different. I'm still a guy that needs ride. I need my loads. I need my rides.
Yeah.
I need somebody to organize my rides. I need to make sure the more rides I get per day, the more money I'm going to make. Uber can say, "Hey, I'll make sure you get lots and lots of rides, and I'll give you a deal on the car. I'll give you some kind of a subsidy on the car, but you have to use my app. You have to use the Uber app for the first 2 years, or that's what the deal on the truck. But you have to use my truck for the first 2 years, or whatever the deal is."
Yeah.
Why wouldn't that be the same thing on Uber cars with Tesla as it is now with the trucks? It seemed like the same deal.
I think the difference would be that this truck deal is pre-robo trucking, where I move the truck driver entirely, right? So if I'm no longer needing to interface with that, I'm just going to clients, then that changes the dynamic. There can be still a need for that once I go robo trucking, robo taxi, and same thing for robo taxi. Like if right now they're dealing with the people and that relationship, which would go to a Gary Black thing of like, you want to have Uber dealing with that relationship, and they have this extra information,
Right.
right? This information and networking and relationship advantage,
Right.
right? But as others have said, once you take out the driver, then the difference is so stark, and all the control and relationship goes to Tesla because they're the only ones who can offer it. They're the only ones who can offer robo-truck and the only ones who can offer robo-taxi, right?
Right, but if I'm a trucker and I no longer I still own the truck. If I'm a driver, but I can now watch football,
Yeah.
you know, my car is still out there. I still need to maximize its performance in the field. I need to maximize the profit, decide when to put it out, when not to put it out, etc. I mean, all that stuff stays the same as far as I can tell.
If you're in supervised mode, yes. If I still need some kind of supervision, some kind of um, even though I'm not driving the truck, like I'm not touching the wheel anymore because I
No,
got an
no,
FSD.
I'm saying if it's autonomous completely,
Yeah.
but I still own the truck,
Okay.
but it's autonomous.
Right.
Okay, I still own the car.
Yeah.
It's
Right.
autonomous.
Right.
I still
Right. So
own
so
it.
then having the management of it, yes, there would be a need. It'd be like Airbnb where someone owns the asset,
Yeah,
they own the house,
yeah.
and then they farm out the managing the cleanup, the turn, managing the booking and dealing with the clients and stuff like that. So they say, okay, take 20% of the fees.
Yeah. Well, they
This
can take whatever they want. They can
whatever. Yeah.
whatever they can manage in terms because it's their app.
Yeah. Right.
So what I'm thinking is when Uber said that Tesla didn't want to partner with them, I think they were talking about they didn't want to partner with them. They didn't want Uber to have their own fleet.
Mhm.
But I don't think that they even have an ability to stop them from
Buying one.
buying the cars
Right.
and putting them out autonomously
Yeah.
under their own Uber app.
Brand. Yeah. Brand app
Yeah,
technology. Yes.
I don't. Yeah, and if you're going to do that and you're going to do it en masse, then you would want to have a relationship with Tesla on that subject so that you don't get into a Hertz deal.
Right.
You make all these mistakes and then it all blows up.
Right. 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 So I think that scenario is what you and I have talked about.
Right.
Now, once it's solved,
Yeah.
then big and small middlemen will take it, and then the big is the Uber and the Hertz and the whatever, and then the small is individuals or people with 20 or 50 or 100 vehicles.
All right. So the China numbers came out last night. No, Monday night. I don't think they were as strong as you were hoping. They were
No,
up. They were good, but it was only 700 and something of the Model Ls.
I
Uh,
thought there was 1105 or something like that. I saw some numbers
I
around.
could be wrong because I don't remember every number exactly, but
Yeah,
only
yeah,
almost every. No, okay.
yeah.
So 700, 800, 1100. It wasn't the 3 or 4,000. I
No,
think.
it wasn't 3,000. No.
Do you know whether any of those are going to other locations? Is Australia, any place else getting Model YL?
Wow. I don't know.
So it could just be a ramp issue. It could be an export issue.
Right. Could be ramp, could be export. That's right.
Okay.
Right. Because this is registration in China.
Right.
So it doesn't count stuff moving outside the country.
Okay. So we
Right.
need to wait another week to really see.
Right.
what's
Right.
going on.
But technically, well, we're supposed to not do the surge end of month clear out,
Right.
but because they wouldn't want to send it on a ship and not have it get there because it wouldn't count as delivery. Right. So they don't want to send it on a long ride to, I don't know, Australia or something like that per se. Right. But if I have YLs to other locations near China,
Mhm.
Korea,
Right.
India, Japan, other places, right?
Taiwan.
Taiwan, yeah. Then they'd be willing to put it on a ship now because they know, okay, if it's a week, it's 10 days, it'll get there, no problem.
Right. Right.
Yeah.
Okay. So you threw a curveball at me. It was already a big day. We already had all this news anyway, but you threw a curveball at me before we started the show.
Yeah.
And you said that you have a theory about what Elon should do now that he's put his $1 billion on the table. And I've been talking about all week that he must know something, maybe
Yeah.
that we don't. I
Right,
don't know.
right,
Maybe a
right,
few things. But anyway, he must believe it's going to go really, really good.
right.
But you think that yeah, anyway, you have some strategy ideas you want to share with Elon. So Elon, you better be listening.
Right. So for all of the tranches where he'll get like 35 million shares 12 times if he hits certain huge goals around making the company go up, to $8.5 trillion in valuation to get all 12, and also hitting goals, the last goal being 3 times $400 billion in adjusted EBITDA, which is basically just profit without one-time charges and getting to the core business. So they make some other adjustments to say, here's the real profit of the core business, not counting other things that are taking out or adding to profit.
And that's roughly double NVIDIA and 4 times what Apple has been for years. I think Apple's higher than that now. They were about 100 billion. I think I don't know what they are right now.
Actually, it'd be 4 times NVIDIA. 4 times NVIDIA.
NVIDIA's
So NVIDIA last 12 months was 99 billion.
99 billion.
So 400 billion would be 4 times NVIDIA.
Okay. All right. 4 times NVIDIA. So has anybody done significantly more than 100 billion that you know of?
Yeah. So Microsoft has, I think, 160 billion.
Okay.
But with slower growth.
Okay.
Um,
And Apple must be well over 100 billion now. I just don't know what the number is.
right. So I think Amazon, maybe Amazon are at higher numbers.
Okay.
Not higher than Microsoft. Microsoft is the highest currently.
Okay. All
And
right.
then there is the one-time number for Saudi Aramco. Saudi
Okay.
Aramco, the country of
Right.
basically Saudi Arabia with all the oil.
Right.
They had 1 year where they got to 220 billion,
Right. Yeah.
right? But that they never repeated again. They didn't hold it. It was, a one-time thing where oil prices spiked up and they got a load of money.
So
Right?
what
It's
you're
not there now.
so what you're telling me is that $400 billion in 1 year would be a very big stretch goal. And the LA Times is wrong to say it looks easy to them.
Yeah, because it's roughly 2 to 3 times more than any company in the world ever. It's less than a double for the 1 year when Saudi Aramco was, selling $120 per barrel of gasoline.
And there was at least one other report that said, wow, this doesn't look like that big a deal.
Right. So those things are huge deals. So going back to what Elon does,
Yeah.
right? So is that the first load of shares, he has to double the price from like a month ago, right? He has to get to $2 trillion,
Right.
We're already at 1.36 trillion, right? So we're already on our way. And part of that was him buying $1 billion, right? But it's not fully sustainable for him to just buy billion and to get it. Although Apple and Meta do a bunch of share buybacks where they allocate $100 billion or $20 billion.
Sure.
The company is buying these shares back. Oracle's done that too, where they buy back shares over time. And that supports the price because now all the profits go to, instead of 3.5 billion shares, if I buy back 100 million shares, it go to 3.4 billion shares, right? So same profit, more earnings per share because there's less shares out there.
And Bradford Ferguson keeps talking about how Tesla should do that. They should buy them back, but they should buy them back as an investment, and they would get but they would hold it like in their treasury and go, oh well, now it's gone up this much, we could sell it back out again,
right?
Which I've argued they would never sell,
right?
They're always going to fear it keeps going up. So anyway, so to your point though, your strategy is
so the thing is, when those 35 million shares come up each time, 2 million, 2 trillion, 2.5 trillion, 3 trillion, whatever, 3.5 trillion, right? Then he gets 35 million shares. He has to pay that price from a month ago. He has to pay like $330 or something per share, right? Now down like $100, but he has to pay that $350 per share, right? So right now we're only at $427, right? On the way to 2 trillion. If he knows,
and 2 trillion would be about
$620, something like that.
520, yeah.
$620. Right?
620, yeah.
So he knows, okay, I'm going to hit all-time highs. I'm going to go beyond that. I know that, right? So even if I get the tranche, I'm going to be paying 350 billion, right? But I know, because I'm on the inside, exactly how good of an investment this is, right? I know that in 2-3 years, I'm confident of the plan. I'm going to get to 8.5 trillion. if I get to the $400 billion EBITDA,
Yeah.
then that would be roughly $16 trillion.
Mhm.
The share price should be 16 trillion,
Right.
right?
Right.
If at any point he's hit certain goals and he's saying, I hit 50 trillion, 50 billion dollars of EBITDA. That's one of the goals, right? 50 billion, which
Right.
is like 4 times more than we're doing now,
Right.
right? But we hit that, right? But somehow the market is not recognizing it, right? We're still down at 2 trillion,
I see. Okay. Yeah. Yeah.
right?
Yeah.
So even though we hit the 50, right? If he does some, you know, 2 billion, 4 billion, a series of buys,
So he should buy more.
buy more, right?
Buy
He
more.
should buy more and say, one, I'm buying on the dip, any weakness, I'm the buyer saying you're undervaluing it. And I know I'm so confident in it that I will buy it now, right? So if the equivalent of buying one tranche will cost him 35 million times $350, right? It's not free.
Yeah.
He'll have to pay for that.
Yeah.
So if he knows 12 months ahead of time, I should pay 420 because it's still a good deal relative to 600, relative to the $1,000 I know it's going to be, right? I should buy it now because I
Yeah.
know it's going to happen,
Yeah.
right? And that also signals confidence
Confidence. Right. Yeah.
to
Yeah.
everyone else to know Elon's knows better than anyone and
Right.
he's buying,
Yes.
right?
Yes.
So multiple advantages to this. One, good return. If
Yeah.
he knows it's going to go up 820 times, that's a good investment, even relative to XAI, even relative to SpaceX, which are also great investments, right?
Mhm.
He could say this is a wonderful
Right.
investment,
Right. Right. Yeah.
right?
Yeah.
And then in terms of the cash, you asked me about the cash.
Right.
He can go,
Where's he
he
going to get
can,
the money? Yeah.
right. So he's worth $480 billion today.
Right.
$480 billion
That's
today.
the day.
That's today, right? But so that's in primarily SpaceX. SpaceX is bigger than Tesla. And then Tesla and XAI are about comparable, right? But SpaceX valuation is going to go up. XAI valuation is going to go up, right? And he could take 10% loan against SpaceX, XAI, and Tesla, and then he would have, say, ballpark 10%. So of his 480 billion, he could have 48 billion in cash. Very conservative. He wouldn't have to sell. He wouldn't get margin called unless all three crashed.
Yes. Right. Right. Right.
Um,
They didn't crash.
XAI and SpaceX cannot crash because they're not publicly traded,
Right. Right.
right? So he can take his cash against that,
Yeah.
and then he could buy. Another point where he could get a load of cash is that, say, second half of next year, they IPO Starlink. They IPO Starlink and it goes
Yeah.
at $1 trillion. They
Right.
raise 10%,
Right.
100 billion. He has half of it,
Uh-huh.
50 billion.
Right.
He has 50 billion in cash. So no loan, no nothing, the 50 billion, right? He could divert half, 25 billion into Tesla for purchases, right? And he can decide when he wants to do it. Dips, whatever he wants to do. He hits certain goals. He knows they're good. He knows the real valuations, whatever. And then he buys it, in his perception, cheap,
Right. Right.
right? And then the value of that is he would be acquiring it and getting, like, after all the tranches are executed, assuming the 2018 package also comes in, he gets up to 30% of Tesla.
Mhm.
That $1 billion buy, I think, got him like 0.6% of of um, of Tesla or something
Yeah.
like
Yeah.
that.
Yeah. Yeah.
Some number, right? So if he was to, a $1.5 trillion company, every 15 billion gives him 1%. So it must have been 0.06% or something like that.
Yeah.
So he gets so $1.5 trillion company, more valuable than today, but not to the 2 trillion level, right? Every 15 billion he loads up in the year before it really starts moving,
Right.
right? Then he's getting 1%. So it's supporting the price, it's helping to make sure it's properly valued, going towards
Right.
the 2 trillion, 2.5 trillion,
Yeah.
right? It's not that much more of a premium over what he has to pay
Right.
anyway,
Mm-hmm.
right? And then he has the cash either through very conservative loans or through IPO or fundraising of SpaceX or XAI.
And I bet you didn't think of the tax consequences also. So if he does it this way, then when he gets his tranche and when he takes delivery of the tranche, he could do what they call take the net amount.
Yeah.
Which is the after-tax amount.
Yeah.
So he wouldn't have to come up with any cash at all to do the deal.
Right. And then he could do it via, over the
And
range of prices.
still get his percentage.
Right.
And the percentage by buying ahead
Yeah.
rather than by having to take the entire amounts of the tranches. Yeah.
Right. That's right. Yeah. So there's, tax advantages, there's other advantages. And if he had aggressive confidence and stuff,
Sure.
if he did 150 billion, which he could be fully within his means to do, right? Then that would give him another 10% of the company, right? So he would more rapidly accelerate to 40%,
Right.
which I think is he said, it's only have 30% of control, but 40% is the kind of control he has of
Right.
SpaceX and XAI. Right. Actually, I think SpaceX is at 45%, XAI is probably at 55 or
55.
60%, right?
Oh.
So balancing it out, so he has like 40 to 50% of each, right? Would be not it would be a pretty good thing to do if he really believed in Tesla bot. Because if you have 10 million Tesla bots, you're going to hit, or except 20 million Tesla bots and robotaxi, you're going to hit the 400 billion. And if you say that I'm going to get to 100 million Tesla bots, then that makes Tesla a wonderful, wonderful investment.
Well, we're running out of time, and maybe we should do another one on this some later date. But just give me 2 seconds on. He's now going to make this massive sign on the top of the Memphis facility saying macro hard, and as a statement about the fact that macro hard is real and that it's going to be significant and that Microsoft is in trouble.
Right. So that's basically saying that his gigawatt data center, the Colossus 2, will have 500,000 then 1 million GPUs, and which is like many times more than anyone else, and it can generate a lot of code, a lot of really good code, so it can make software that can compete with Microsoft. So basically, he's saying he's coming after the software business with AI.
Yes. Yeah. In fact, it won't even be really software anymore. It'll be kind of, my understanding is it'll just be creating the software on the fly as you vibe what you need. Is that kind of right?
It's more complicated than that, but it will be software generated by AI.
Right. Okay. All right. Let's see. Tesla is going to fix their doors, their door handles, their door locks. Right now, as everybody who has one knows, you've got the little door lock where you're supposed to use it because it's doesn't damage the mechanical capability if you use the electronic one, and then separately and kind of hidden is this mechanical one. And people have complained before, oh, you can't find if you're upside down in the river. You don't know where it is. And so for some reason, the electronic one isn't working anymore. It's hard to find I don't think that's true, but they say now they're going to come up with a way to make them somehow integrated in the same place. Thoughts?
That's for the safety, like you say, make it simpler so that there is no mistake. Even if it only happens 10%, if it was happening in an emergency situation, that'd be bad.
Yeah. All right. Okay. Let's look at the numbers. Let's see where maybe, unless I forgot anything.
Nope, that's nothing else.
All right. Okay. All right. So what we got here is we now have, even as we've been sitting here, Elon is getting richer by the minute. We're now at 428.63, making it even more likely that we'll open up tomorrow above 427.
Well, it's according to the pure technical thing, it has to hold it for an hour.
And hold it for an hour. Okay.
Yeah. So after an hour after the open, tick, got the whole candle.
Then that's it. Okay.
Right.
All right. Okay. So we're looking at 427, but 428.50 in the after hours right now. And we have got the bonds. Have the bonds moved? Let's see here. Yeah, of course, this thing is so slow now. Let's see, here we go. The bonds are continuing up a little bit, believe it or not. 4087 now. So this is not good, but I still think it's profit taking. We'll see. We really won't know. I think it was Nicholas Gibbs said last night, you really don't know the impact of what the Fed did until Thursday. Today, it's a lot of rushing around and trying to take it, find out where you need to be. And tomorrow you get the real players. All right, we'll see. We'll see about that. Oil flat, 64.13. Natural gas also flat, $3.08. It's very, very close to where it's been recently. Okay, gold. It's actually off. Now let's see. Okay, so the yields going down should make the dollar go down, should make gold go up, but gold went down. Okay.
Bunch of manipulation, stuff
Yeah.
happens. Yeah. You have to have enough of your thesis to, like if you're a retail trader,
Yeah.
to hold through and say, okay, because of this, I'm convinced it's going to do that. Or swing trade or you can day trade, you have some kind of like time frame, right? But for a longer term player, then
It's only down 0.55, and of course it's at all-time highs by a lot, so it's not really a big deal. Anyway, silver also down a tad, 0.08, and copper down 0.31 as well. The dollar is slipping a little, although against the yen it's up, so who knows? And Bitcoin flat, completely flat, $94 for the whole day, $94.
Yep. And then Ethereum's up like 1.68%.
Yeah, I'm sorry, I forgot to do that. Ethereum is up 2.52 for the day, 2.52, 113. That's interesting. That sounds like Tom Lee is right. I really want to see, I got to see something on Tom Lee tomorrow. Got to see what he's saying about what all of this.
So what he said was that Bitcoin and particularly would move based on the rate cuts. That the rate cuts would be good for Bitcoin,
Right.
and thus be part of his getting to 200,000 by the end of the year thing for that.
Yes.
Ethereum also helped to a certain extent, but mainly because of the increasing usage that they use it for AI and smart contracts and other things. And so then he's even more bullish, probably in the medium term kind of thing. But then he is part of some Ethereum network
Yes.
thing. So it's not
Yes.
like he's not doesn't have a conflict of interest.
He has a
right?
dog in that hunt. Yeah.
He has a dog in that hunt.
Okay. And then we've got the equities for tomorrow. Dow up 0.3, S&P up 0.36, and NASDAQ up 0.45. So looking like maybe the equities, well, the Dow was actually up at the end of the day, but the S&P and NASDAQ were down a little bit. But the S&P right now is sitting at 6682. 6,700 is only 18 away. I mean, who knows what the S&P could end up at the end of the year. I mean, it would be crazy for it to get to 7,000 by the end of the year.
Yep. Yep.
Holy mackerel. Well, that's really wild. Okay. Yeah. So, yeah, that's all I got. You got anything else?
No, that's it. That's it. Yeah.
All right.
There's lots of other stuff happening.
Yeah.
A lot of things with AI. I think the biggest story, that could be historic is, does Grok 4.2 come out at the top of the leaderboard?
Right.
Does Grok 5, which will come out by the end of the year, that they'll
Right.
start training in a few weeks,
Right.
and they should release it by the end of the year, January or something like that. But that if it uses another 5, 10 times more compute,
Yeah.
and it should separate, in terms of the leaderboard where they do this comparison, there's points and stuff like that. It could pull away into 150, 200 point game, right? Whereas like the best other model at 1500, it goes to 1700,
Right.
up from where it's at 1400 now, right? So that kind of move, although the actual metrics and other stuff like that, don't really tell the full story about what it's doing, right? But basically, if it pulls away by the end of this year, then the societal life-changing stuff, if it's not just the score, if it
Yes.
actually does AGI like Elon's
Yes.
talking about,
Yes.
where it's like it's doing everything humans can do, it's agentically doing things, all the powers, which I would expect some months to kind of play out, just like the driving of like it does drive better than human. It's some rough edges may have to come off first before you get the full.
Right. Right.
But if that story plays out, say from end of this year through the first 3, 4 months of next year, right? Then the futurist scenario of insanely great AI takes over and potentially, the whole um, economy changing thing, which someone should write a book about. But
Somebody should write a book about that. I'll end with this. I'm going to announce it first on your and my show, is I think I have the title. I've been testing it today, and I think we've got the title. So it would be AI Rising, Mastering the Age of Abundance.
sounds pretty good. That sounds pretty
So
good.
yeah. So I think
Comment below. Tell us what you think.
yeah, that's right. Put it in the comments if you think that's a good one. All right. Then everybody should, of course, follow Brian wherever he goes on
Next Big Future website, YouTube, and X. Yes.
why do I always have the trouble?
And Patreon.
I
Yeah.
always think future first, and
Yeah.
that makes me think future Ozza. And then but
No,
next big
no, that's the
future,
other guy.
that's what next big, yeah, don't forget. Yeah. No, follow both Brians. It's pretty funny that both of you also have future in your brand. And then earlier today, as I said, I did a Fed story. If you want to see the details of that, I'll put that card up right here. And then tonight, I don't think I'm going to have a show tonight unless something really pops. So because I already did the one earlier. All right, that's all I got for everybody. Brian, say good night, Brian.
Good night.
It's been
Good night,
great
Brian.
talking to you.
Okay, bye.